to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Once again, we're going to try and do a 15-minute show, which will probably turn into a half an hour, but what the hell. Yeah, we're making baby steps. Started this adventure off with you guys quite a few years ago. And God, when we first started doing these things, we'd probably be here like an hour or two. So as well too, we do the Afterparty, which is sort of our site members video broadcast, answer questions directly, spend a little bit more time interacting with the audience, and as I said, answering questions and seeing if there's anything half decent out there for us to be looking at in the market. Had a little bit of a brain fart over the weekend. Actually, it kind of started late last week, but it looks like we've got things resolved. Had to take a good portion of the morning to work away on getting Google happy again. Oh boy, what a headache that was. So I think we have our act together, but what it did mean is that I haven't really been too active actually looking at the market, taking positions. Actually, I had a pretty nice level that was swept there in crude oil this morning, but as I said, unfortunately, I missed the level, so not really much I could do here today. And actually, Chris was just saying a few minutes ago that he's pissed off that he missed a trade there in the gold. It looks like the gold's coming off a chunk here, which is interesting. Usually that is a deflationary vote, i.e. US dollar should be firmer. US dollar has come off a chunk here, but I still think, believe it or not, US dollar could actually come off a bit more. I don't see any real reason for this slide here in the dollar to stop in the near term. 2.618s are basically just a test of the V bottom original lows here, so I don't know whether you can really infer too much into that. So if anything, we've had a fairly precipitous slide here in the US dollar index. Still think there could be a bit more. It'd be interesting actually to do a fog and bomb off of this top here. What is that high? 106.13 and 106.12.6. Oh, that is a double top. So let's see what we get there. Survey says probably see that this is like exactly a 4669 or something. Boom. 2.618. Not really the best level. Anyway. So as you can see, RSI is trying to put in a bit of a W here. I suppose that is a little bit of a bull div. MACD, I don't really like it when MACD puts in these kind of floors. Usually the market's going to run out of steam and then I'll have to roll back over and test that low, but we'll see. And Willie does appear to be a bit stupid here. So I suppose from that perspective, being a seller here probably is not the best idea. Coming up this week, as you can see, we have our little, oh no, we don't. So are we not going to put that little thing up in the bottom corner there? I do like the idea that the public can see sort of what I'm supposed to be talking about here and what's coming up. Yeah, so I guess what I should do is I'll put that there. Is that what we're going to do going forward? Kind of sucks. Oh, maybe for tomorrow you can try and put this back on the screen here. I don't know. Let's see. Anyway, so you can see what I'm supposed to be doing here. Breadth, I'm still not overly impressed with what I'm seeing out of the broader economy. Here is our breadth reading. And what this says to me is that in the short term, a lot of names are breaking down. We haven't done a lot of medium-term technical damage. And if we kind of look at the S&P 500 itself, that kind of makes sense. I wonder where the best place to show you that is. Let's go over here. I think that the S&P has gotten into some pretty nosebleedy levels. Got these big honking higher time frame AB equals CDs, boom, 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 booms. And we also have these lower time frame ABCDs, boom, 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 boom. These are all getting hit. I wonder whether maybe we should probably do the measured move off of there. Probably gives us a little bit more of an upside objective. But especially when you get like these double AB equals CDs, like multiple of them, that to me is a bit of a warning sign that things are getting a little bit nosebleedy. So don't be surprised if we actually have to come off here a bit. And if anything, the way that I like to use the breadth indicator, I've talked to you all about this in the past, is I would actually look at the breadth indicator as kind of like another indicator confirmation. So I think you could make the argument that we've hit this huge ABCD that sort of came out of last fall's eclipse pivot. So we finally hit that. Interesting, right into the July 4th holiday weekend. I suppose that's a little bit forward. Oh, yeah, there we go, right in there. And now we've hit this lower one. We have made a new high here. What do you think the odds are that the indicators are in slight divergence? And if I ask a question like that, then you probably know that they are. So you can see Willie is very, very stupid. I don't think it's in your best interest to go and buy this market here. This is asking for trouble. MACD has not confirmed that bear div. If we get any kind of break in price here at all, any kind of weakness at all, and that big honking MACD histogram rolls over, then I think we got trouble. RSI is officially overbought, reading above 70 on this out of the box RSI 14 setting. That usually is an overbought reading. Nothing really squeeze wise from the Bollinger Bands, but nonetheless, we are getting overbought readings. This market is egregiously overbought. And you can also see, and I was kind of talking about this with you guys last week, you can see how the volume impetus is rolling over. So if we actually get an up day, and geez, I might even argue that that's what happened right here. But an up day that's lower because you got one high, two highs, three highs now. Actually, level oneers just did OBV and volume impetus in the most recent week's module for the level one program. So this actually should be a good lesson for all the level oneers on that volume impetus kind of idea. I mean, you can clearly see the market's overbought. We're almost in divergence. We haven't quite broken here. If we get any kind of price weakness here at all, and that will confirm the divergence. And then it's just a question of, do we get a big fat M to actually frame a correction? You can see where the 200 SMA is sitting at 4,900 and change. And here we are at 56. That means quite literally there's a good 10, 15% haircut potential here that could come out of nowhere. So I think the whole point of us looking at this chart was to try and sort of wrap our brain around what's going on with the breadth indicator. We're not egregiously overbought, right? And I do see signs from things like the Willie that we are overbought in the on the price chart itself. But for the broader market, we're not really at an extreme, which means I could see just a normal, healthy correction in price as we're sort of playing along this midpoint. And probably the bias, if you will, for the broader stock market is lower. And actually, it's interesting when you read the news headlines. I did see one headline here this morning that were kind of like, this market feels like it's a bull, but it's not really going anywhere. Did also see some interesting news out of Boeing, and they're going to actually what's the word? They're going to I can't I guess plead guilty to a felony charge. Ooh, that's big. Um, did see that some of the people that were involved in some of these crashes, though, recently said that this is sort of jockeying with the lawyers, that they won't have the ability to sue Boeing. But nonetheless, actually agreeing to a felony charge. And the interesting thing about this is this might actually prohibit Boeing from actually doing military contracts. So to be this should be an interesting story, and I think we'll be talking more and more about this Boeing story going forward. The irony of it all is if you look at the price chart, Boeing stock's actually rallying on the day. Go figure. But I don't know. Feels to me like this story is far from over. Yeah, it's interesting how some people are actually calling Boeing too big to fail because it just has too many military contracts. So there's an interesting development in the market here now. I'll tell you that much. Um, well, of course, always interesting to see Mr. Biden here. Said he vows to race to the end, whether his walker gives out on him or not. I tell you, I'm sure Mr. Trump's probably just sitting there going, "Oh man, this is too easy." I thought one of the best lines out of that debate that I saw, which made me really laugh, was uh, Trump looks over at Biden while he's talking. And he goes, "I don't even think he understands what the hell he just said." That made me laugh. So, anyway, it is interesting. I put tweets and stuff out about how the Democrats themselves, they're having a very, very hard time with all of this. And I just said it's so obvious that if there's anybody sitting on the fence, they're probably like, I don't know how I can vote for Biden. I mean, the guy looks like he's half dead. And if Biden does mysteriously win this election, then I think it's pretty good evidence that the whole thing was cooked. But anyway, who knows? Only time will tell. And I put out a tweet to that effect, and somebody goes, "You're retarded, Brian." It's like, what? Yeah, well. All right. So, news-wise, interesting development with Boeing. Biden, of course, staying in the race. Where's my little itinerary? Oh, Jesus, now it's gone. What else am I supposed to be talking about? I gotta go find that tab again. Where is it? Over here. Breadth, we talked a little bit about that. I mean, breadth is not really encouraging right now. And we also looked at the ES chart, which I think looks pretty dangerous. It might even be worth taking a good look at a put option in here. Interesting. We have semi-annual Humphrey Hawkins testimony coming up tomorrow and Wednesday. It's interesting how they don't make reference to Humphrey Hawkins anymore. A lot of sort of the old time sort of practices that I see in our society, they're trying to get rid of. Not quite sure why. But anyway, this was basically Congress's mandated requirement that these stupid central bankster crooks actually come and twice a year at least face the U.S. Congress and the U.S. House of Representatives one day and the Senate the other day, and at least give the politicians who are supposed to be representing the public the opportunity to bitch at them. I think it's turned into a little bit of a charade of late, where the politicians are, kind of half in the con with the banksters. But for whatever it's worth, we probably shouldn't read too much into what we see in the market today. And unfortunately, because of the Humphrey Hawkins testimony, we'll probably be spending most of our uh, day just listening to it versus actually hunting setups. I really don't like trading when you have FOMC press conferences, FOMC events, Humphrey Hawkins, because what I noticed is that a lot of people, the market participants, they back away. And so then the algos just turn into liquidity hunting orgy and just wash stops back and forth. Friday actually was a really good example of that, where we had a relatively illiquid market because of the holiday environment. You know, literally, the crude oil market made a megaphone pattern, and it was just stopwash after stopwash after stopwash. It was just a pain in the ass. So, thank you, sir. So that's probably going to dominate most of our sort of midweek conversation. Later on in the week, actually, is when we get the big ugly numbers. Of course, a lot of people in the States are kind of thinking that the Fed's probably done raising interest rates. And the question ultimately is, when do they actually start lowering rates? As long as the stock market keeps moving to new highs, I can't see how they lower rates. So, the fact that Nasdaq and S&P moved to new highs there on Friday. Interestingly enough, in the face of that, the Fed minutes came out, and I think that's one of the reasons why crypto sold off. I don't know whether you guys have noticed this pattern, but quite literally, especially things like crypto, not so much the stock market now, but definitely things like crypto sells off dramatically, literally the moment after those Fed minutes are released. Let's see. We talked about Boeing. We talked about Biden. Um, French elections, kind of an interesting twist. It did look like the right wing was going to take over the continent there, and all of a sudden, Le Pen looked like she was doing really well, and of course, she was kind of like anti-involvement in Ukraine. Social media influencers saying that she's pro-Putin. I don't know whether anybody's actually pro-Putin, but I do understand that Russia, they do like to encourage people to think one way or the other by waving great sums of money in their faces. Who knows how all that's going to play out? But it is interesting that the left actually in this sort of second round of election runoffs, the way they have their elections over there in France, the left leaning party actually has won the most seats in their parliament, meaning that the right wing, the militant side of the equation there had been put back in the box. It's interesting too. The UK, in a really weird sort of way, the Conservatives have been in power forever there, and now, ironically enough, a very left-leaning, very socialist government has been elected there in the UK. So, ironically enough, you thought inflation was a problem before? Oh boy, you poor people in the UK. You've got the socialists now fully in control. And wow, get ready. There should be an absolute shitstorm for inflation there. Anyway, that's just my opinion. We'll see what happens. Same thing out of France, too, right? Because the leftist leaning party won there. So, unfortunately, and actually, this is interestingly enough, this is actually going to lead to the demise of the euro. I was passing around an interesting little piece by a Croatian gentleman that somebody had shared in the TRI lounge. He was a bond trader, and he's absolutely in love with the idea that the eurozone, the whole euro concept, could basically disappear here within the next 10 years. And in a weird sort of way, that would actually make sense given the cycles. This is an anti-euro cycle now. This is a pro-US dollar, pro-growth cycle that we're in right now. And of course, good old, communist China excuse me, communist Canada. It's hard to discern the two. Yeah, the commies here, they've destroyed this country. It'll be interesting to see in this coming election if Mr. Trump does win, and if the right wing guy here, who people are expecting to win in China, it'd be interesting to see how violently the pendulum swings back the other direction. But anyway, we'll see what happens. Only time will tell. I suppose finishing off this public broadcast, quick boo at the corn. Last week we were thinking about the market bottoming into the July 4th holiday weekend, which I think actually seems appropriate. The question was, though, when the hell is this going to happen? Actually, that's not what I wanted to show you. I wanted to show you the Bitcoin chart. The Bitcoin. I can think of one over here. Yeah, there we go. They always say that the big boys always fall last. So if anything, it's actually a good sign that Bitcoin's finally breaking. Spent a lot of time yesterday talking about the technical damage that has been done here. I find it fascinating that I put out a tweet yesterday and somebody was like, your TA sucks. And I'm like, excuse me. I mean, for whatever it's worth, the guy's probably a total fucking idiot, but who knows? But I walked the entire world through this trade from inception to taking profits to sitting on a risk-free trade now. Fuck you to my TA sucks. Nobody else in social media was talking like this. And I was the only person that had the balls to step up and say, we probably should be shorting this. So I find that fascinating. Some guy actually said my TA was no good. Like, fuck you. Jesus Christ. Why am I wasting my time doing this? Stupid idiots. So I think my TA is probably better than 99% of the people out there. And frankly speaking, I still don't really see a reason to change my tone here. And especially with this image staring us in the face, you have to. We're now in a market state where you actually have to prove to me that you are still a bull market, because you are proving to me, technical analysis wise, that you're not a bull market anymore. So I did find that fascinating. The interesting thing here, though, is 38.2 is supposed to be our first stop target. Man, of course, we had a long time site member call in, and we like to call him the pump chaser zone. I think that's the name that he gave, 38.2 to 50%. And I've told you how I believe that, and especially if we look at a chart like this, I think we really do need to see 50% levels traded to, just to clean up the technical picture. And I don't know how anybody can say that TA is bad. That TA is perfect as far as I'm concerned. I was the only person in this space cautioning you that you shouldn't chase. I was the only person making fun of the Gucci sweater wearers because those guys were idiots coming in and telling you. And, I was the only person going, no, this time isn't different. It's exactly the same as it always is. Always is exactly the same. It's TA 101. And yet people actually have the audacity to say that my TA sucks. Like, I couldn't believe that when I saw these stupid social media troll idiots. It's probably some fucking CCP idiot that's trying to piss me off, and they did, just because I make fun of Winnie the Pooh and a fucking idiot over there in Russia blowing up his country. But anyway, it is what it is. So I mean, like I go, all right, let's circle back around. Let's look at crypto, but it's not a hell of a lot for me to tout about crypto. I mean, really, as I said there a second ago, I think the best statement for you is this market now has to prove to you that it actually is still a bull. I think the final shoe to drop that we'll know that this thing is trending lower is if these moving averages actually cross back over to the bear side. Then I'll be like, oh man, put a fork in this thing. It's done. If we're really lucky, and my hunch is this is the way this plays out, but you never know in this crazy game. But if we're really lucky, what ends up happening is through the rest of the summer, like I said, we're coming out of that July 4th holiday pivot. That's usually when the market likes to sort of shrug off that sell in May and walk away. The June tax loss selling, and we get a nice little seasonal bump. But doesn't have to. I mean, the market will do any old damn thing it wants. If anything, if this kind of scenario does play out, ironically enough, the bear is still perfectly in control. The only way that you see that the bear is not in control, given what we see here, is if they can somehow get the market back up to new highs here. And then you're kind of like, okay, well, maybe if we can get some bullish structure, we might actually get a buy signal, and away you go. But as it stands right now, man, there's no reason to touch this thing whatsoever on the long side. If you're an investor, just leave it alone. If you were so lucky and you were actually able to get short off of these M's, then I would say, and I suppose, ironically enough, the M itself will actually tell you exactly where you should be taking profits because of risk first approach. So there is the sort of short entry stop on a close above those highs. And we want to look for 2-to-1 risk reward, right? So ironically enough, what a big surprise. Basically a move right against these lows that we saw back in December, January. It's not really shocking at all. But having said that, you could very easily have this market completely rally back up true trendline resistance, and then maybe sometime this fall they actually bring this thing down into trend lines and then maybe bottom, and away we go. I could see a scenario like that. That wouldn't surprise me. So like I said, because we're in now the seasonally friendly window, I am thinking that these big boys, I mean, that is a pretty straight line move. Could we have a bounce up? Yeah, I think so. It's not outlandish. You can see last week we had sort of, at least I had sort of said that it kind of felt like that whole German news was a bit of a capitulation event there. And indeed, we had a pretty substantial dead cat bounce coming out the other side of that. Interesting. I mean, this was fascinating. What a great lesson about Foggenbaum and chaos. So we just basically banged up against the most recent market structure fail. And if this thing was a bull, then what you should see is the market break that previous bearish structure, right? Because this is an M. So that's bearish. M's are bearish, W's are bullish. And notice it couldn't. I think that was actually a very important fail right there. So the fact that the market could not break that level, and it was right at a 4669, and oh boy, what letter of the alphabet is that? So I certainly don't have any reason to be bullish here. It would have been interesting had we gotten up through that level. I might have said, you know what, maybe we should cool our thoughts on the bearishness. And then notice, following this M, dead cat bounce right back into the M, and then here comes another M. So can I please see some W's? We had a cute little W that came out of here. Fortunately, I think it played itself out. Now this M is working, and now we have another M working. So it is interesting that we had quite a fight here. And what we really need, if you are a bull, is you need this market to close back above these levels. And then that would probably set up one of those Mr. ICT kind of trades where that's your market structure shift to break through that. And then you just draw your fib back down against the lows. And, I think anybody who's a fan of him, right? He talks about, what is it, the fair value gap thing. I personally have found just, me, that good old mountain man sure seems to line up nicely with those fair value gaps and all that kind of stuff. So where's Mountain? There he is. So if we do get this W to confirm, then what I'll be watching for is the pullback into Mountain Man and how does it act following that event. But we're not even at that stage yet, folks. I'm sorry. And especially with Humphrey Hawkins tomorrow and Wednesday, I can't see this thing breaking out anytime soon. All right, why don't we leave it at that? We'll head on over and maybe look at some altcoins. I did do some buying in altcoin land. There were some really, really great looking prices. Doesn't necessarily mean the bottom. If anything, this was a really good question that was asked in the lounge today. What's the difference between working stink bids at levels versus waiting for bottoms to come in? And really, this is an ongoing conversation in the market. It's consistent, and it's a question of price risk versus information risk. So if you don't have enough information, then you're taking price risk, which means that you're probably like buying against lows, selling against highs. If you have the discipline to buy, sell 88.6s, that kind of idea, then sometimes you can get handed just absolute incredible trades. But you're trading without information. If you want to wait for information to come in to validate, bullish divergence in momentum, bullish divergence in price momentum, in volume impetus, Willie stupidly overbought, oversold, W's in price, candlestick patterns, 8s and 9s on your Tom DeMarks, all those kind of fun things. Well, that's information. And if you want more information that confirms that indeed we're at a pivot and things are turning, well, you're going to have to forego price a little bit. And so that's why I often say that down the road, you often see that markets actually bottom off 78.6s. So let's head on over to the after party and let's circle back around. And I can't speak for Sjord, and Sjord's on vacation right now, so you'll have to wait for Sjord to come back. But we can always, if I can answer any of your questions that were posted, and I think we had a few requests in the DB request room, maybe I can give you some value in that regard. So, okay. Have yourselves a great day. I hope you enjoyed the public offering. Come on over, consider joining the site for the after party, where we do interact quite a bit more with the audience and answer your questions. And other than that, have yourself a great rest of your day. I suppose the only thing left for Brian to say to you is bye for now.